Let's move on to energy. Now, what's the picture there and why are you bullish?
Yeah, so energy's been in a gigantic bear market since 2014. And at this point, I think there's two unappreciated aspects of the demand and supply case. So on the demand side, the demand is really all about emerging markets at this stage. And it's countries in Southeast Asia, India, et cetera, that are at the stage of development where they are most energy intensive. And so that's why demand for oil in aggregate globally will probably still rise for quite a few years. And I think that's underappreciated. On the supply side, there's been very little investment over the last 5 years. The global depletion rate of annual production is something like 5 to 6% per year. And over the past decade, really the marginal source of supply has been US shale. And we know that the rig count has collapsed in the US, something like 70%. And so I think that's underappreciated as well as a source of supply contraction. In terms of the case for the equities, I mean, the sentiment is just dreadful. Of course, the industry has fallen about, I mean, if you look at, for example, the oil services industry, it's down about 90% from its highs. The asset valuations are at record lows, and these companies have cut a lot of cost and are quite lean at this point. If you consider Schlumberger, Halliburton still generating free cash flow at this point in the cycle. So it reminds me in some ways of the precious metals industry 5 years ago, in the sense that you have this these divestments from endowments and whatnot, the sort of virtue signaling on the back of ESG. You have Exxon being taken out of the Dow Jones. And 5 years ago, there was this very large precious metals fund that was called, I think, Vanguard Precious Metals Fund. And it was so bad that they changed the name of it to the Vanguard Global Cycles.
Wow.
Fund. And that was like 3 months before the bottom in gold. So, history doesn't repeat, but it does rhyme. And I think that's interesting to consider.